Hello everyone, Banking Drive Committee presents you yet another informative video on the series on regulatory bodies. The previous topic was explained in the series was monetary policy and banker to banks. Today's topic is financial regulation and supervision. So to begin with, India's financial system includes commercial banks, regional rural banks, local area banks, cooperative banks, financial institutions, and non-banking finance companies. The Reserve Bank regulatory and supervisory role has therefore acquired added importance. The Board of our Supervision, constituted in November 1994, is the principal guiding force behind the Reserve Bank's regulatory and supervisory initiatives. So, there are different departments in the Reserve Bank. One of the departments is Department of Banking Operations and Development, DBOD, which frames and regulates for commercial banks. The Department of Banking Supervision, DBS, undertakes the supervision of commercial banks, including the local area banks and all India financial institutions. The Department of Non-Banking Supervision, DNBS, regulates and supervises the non-banking financial companies, whereas the Rural Planning and the Credit Department, RPCD, regulates the regional rural banks and the rural cooperative banks. For the regulatory and supervisory functions of RBI, the Reserve Bank's regulatory and supervisory policy initiatives are aimed at protection of the depositors' interest, orderly development, and the conduct of the banking operations and liquidity and solvency of banks. The Reserve Bank represents India in various international fora such as the Basel Committee on Banking Supervision and the Financial Stability Board. Its presence on such bodies has enabled the Reserve Bank's active participation in the process of evolving global standards for enhanced regulation and supervision of banks. The major regulatory functions of the Reserve Bank with respect to the various components of the financial system are as follows. For commercial banks, it's licensing, corporate governance, statutory preemptions, interest rate, prudential norms, risk management, disclosure norms, protection of small depositors, know your customer norms, para-banking activities. For foreign banks, in February 2005, the Government of India and the Reserve Bank released the roadmap for presence of foreign banks in India, laying out a two-track and gradualist approach aimed at increasing the efficiency and stability of the banking sector in India. One track was the consolidation of the domestic banking system, both in private and public sectors. And the second track was gradual enhancement in the process of foreign banks in a synchronized manner. For financial institutions are an important part of the Indian financial system as they provide medium to long-term finance to different sectors of the economy. These institutions have been set up to meet the growing demands of a particular segments such as export, rural, housing, and small industries. These institutions have been playing a crucial role in channelizing credit to all the above sectors and addressing the challenges and issues faced by them. There are four mainly financial institutions which are Exim Bank, NABARD, National Bank for Agriculture and Rural Development, NHB, the National Housing Bank, and SIDBI, the Small Industries Development Bank of India, which are under full-fledged recognition of the Reserve Bank. For non-banking financial companies, play an important role in the banking financial system. It is defined as a company engaged in the business of lending, investment in shares and securities, hire purchase, chit fund, insurance, or collection of monies. Depending on the line of activity, NBFCs are categorized in different types. Recognizing the growth in the sector, initially the regulatory setup primarily focused on the deposit-taking activity in the terms of limit and interest rate. For primary dealers, in 1995, the Reserve Bank introduced a system of primary dealers, PDs, in the government securities market, which comprised independent entities undertaking primary dealer activity. PDs play an active role in the government securities market by underwriting and bidding for fresh issuances and acting as market makers for these securities. For credit information companies, they also play an important role in facilitating credit to various borrowers on the basis of their track record. Credit Information Companies Act 2005 empowers the RBI to regulate CICs. The Reserve Bank announced in November 2008 that foreign direct investment up to 49% in CICs would be considered. So this is all for this topic. Please share, like, and subscribe, and stay tuned for the upcoming videos. Thank you.